Hi everyone, I'm back. Let's start today's paper. Oops. So today we will be working on the 10th set of paper, April year 2019. Here. Okay, again, 100 marks, 5 compulsory questions. Okay, let's start with question 1. So question 1, given to you some information and then you are asked to work on the control account, trade receivables, ledger control, bank account, and also how these accounting concepts are applied. Okay, so I would say this is control account and accounting concepts. Okay, so let's see what is given to us. 5 marks, 6 marks for the trade receivables, ledger control, and also the bank account. Gino provided the following information, the following balances on the 31st of December year 2018. So let us take a look what year we have to deal with. Okay, not mentioned here. Okay, so this is 31st December year 2018. The following had not been accounted for at the end of the year. Okay, so we are going to update it. Okay, so this is end of an accounting period. So bank account, rent, trade receivables, ledger control, given to you the balances. Okay, all normal balances and not given to you any other, otherwise. The following had not been accounted for as at year end. A credit customer's check for 245 returned by the bank. Dishonored check. Okay. Payment to supplier. Okay, supplier not related to trade receivables by direct debit. Okay, a payment. And then a bank transfer from credit customers 2365, an increase in the allowance for doubtful debts by 750. Okay, so this is not related to the control account nor the bank account. Next, the sales journal was overstated by 1,000. So we have to reduce the amount of trade receivables. And then standing order payment for rent. Okay, a payment. Okay, and it is for the month of January. Okay, for next month. But then it is a payment, then we have to put it into the bank account. Okay, so let us put the balances first. Bank 1575. And then 96000 for the trade receivables ledger control. Okay, let's draw the lines first. Trade receivables ledger control is in the debit side because it is trade receivables. So year 2018, 31st of December. The balance being 96,000. And then $1,575. Okay, so since these transactions happened before year end, okay, we have to make adjustments. So everything will be dated the 31st December year 2018. Okay, only the balance brought down will be on the 1st of January year 2019. credit customer's check 245 returned by the bank 245, right? Okay, so when we have a dishonored check, okay, it will go into here because before we have received this amount, but then now it is I mean the check is dishonored. So this customer owe us the money that is being settled. Okay, 245. 1st December, trade receivables, ledger control. Okay, so next one, payment to a supplier 315. Okay, a payment 315 to supplier. So it will be trade payables, ledger control, a payment. Okay, next, bank transfer from credit customer 2365. Okay, a bank transfer from them, a receipt for you. Okay, so 2365 here. Okay, so again, receive from credit customer, so it will be again trade receivables, ledger control, the 1st December, and also here. Two, 3, 6, 5. Okay, so next one, an increase in the allowance for doubtful debt. Again, it's not related, so we can ignore. The sales journal was overstated by 10,000. 1,000 overstated. So we have to reduce the amount. The 1st December, 1,000. Okay, so if this is the case, then we have to reduce the amount of sales. Okay, reduce the amount of sales as well as the trade receivables ledger control as well. Okay, so sales here. Okay, it's not related to the bank. And then the last item, standing order payment for rent 200. Okay, so 1st December, rent 200. Okay, so nothing more, then we will balance these two accounts. 96,000, 245, 2565, 1,000. It would be 92880. 92880. 31st December, balance carried down, balance brought down, year 2019, 1st of January. Okay, and then for the bank account, 1365. Okay, so 3180, balance carry down. Okay, finished. Next, state one difference between a standing order and a direct debit. Okay, standing order, direct debit. This we have discussed earlier. So standing order and direct debit. Okay, standing order is an instruction to the bank to transfer money. regularly, we can say usually it is like that. Monthly or bi-yearly. Okay, direct debit, okay, is a permission. Okay, so I can say like this. Okay, you can also say standing order is usually of a fixed amount, and direct debit is usually of variable amount. Okay, just like insurance, you are paying monthly the same amount, but then for electricity, it is according to your usage. Okay, so next one, we have 6 marks. Okay, state how each accounting concept is applied when preparing the financial statements. Okay, preparing financial statement is a very broad term. Okay, so we will try to do it. Okay, so accrual concept. Okay, accrual concept, matching principle, they are the same. Okay, so we have to, for example, for expenses. Okay, we have to record or recognize expenses when incurred, not when it is paid. Okay, simple way to put it. Okay, business entity is we have to separate the owner from the business. Okay, so it is related to, can be related to drawings. Okay, if the business pay for owner's private expense, okay, then it would go into the drawings instead of the expenses of the company. Consistency, okay, usually we can use the example of depreciation. Okay, okay, use the same depreciation method from year to year. Okay, going concern, usually we apply the going concern to the valuation of non-current assets. Okay, so non-current assets are valued at cost minus depreciation. I should say accumulated depreciation. Okay, next one, materiality. Items or expenditure not material, okay, or not significant amount. Not recorded separately. Okay, or you can say, for example, stationery expenses, because they are not material expenses, then you do not put it into the non-current asset. You simply write it off as expenses for the current year. Okay, the same. Prudence. Okay, so you can say allowance for irrecoverable debts should be recognized. Okay, so let us go back to the question that is asked. Okay, part C, you can see here. It's very important to read the question. State how each accounting concept is applied when preparing the financial statements. Okay, so for me, how it is applied, okay, here, application, it doesn't mean that you have to explain the concept. Okay, it asks you to state an example how it is applied. So you can see from our the answers that we write, it is really the application of these accounting concepts, okay, which I think is a fair answer for this part, for the question being asked. Okay, but if you look at the mark scheme, okay, for the suggested answer it gives, okay, it actually put explanation instead of how it is applied. Okay, so if you are interested, okay, you go and look at the mark scheme. Okay, but here I would like to really show you how these are applied instead of just sticking to the mark scheme given. Okay, so question 1, 18 marks finished. Question 2, 7 items given to you, and then you have to fill in the extended trial balance for Mia. Okay, and then some other questions, 19 marks. Okay, so extended trial balance. So let's see. We have 7 items. Let me number them first. Item 1, goods. Cost price 750 taken for personal use had been recorded in the sales account. Okay, nice. So it is not mentioned whether it is put in the drawings account or not. I suppose it has, okay, because the drawings is in the debit side, so you have put it in the sales account, which is a credit entry. That means only the credit entry is incorrect. So what I will do is 750, I go to revenue, 750 minus, because revenue is a credit account, and I go to purchases. Okay, and we have to reduce the amount of purchases instead of putting it into the sales. Okay, so 750 reduce the amount of purchases. Okay, it is not mentioned whether the drawings is correct or not, so we have to assume that it is. Next, cash 1450 taken for personal use had been treated as wages. Okay, this time, okay, it is of drawings, okay, because wages is a debit side account. Let us look at where is wages. I can't see wages. Okay, wages and salary. Wages is debit, so credit bank, a payment from the bank, okay, and then it goes into the wages, okay, which is incorrect. Okay, so we have to reduce the amount of wages 1450 and put it back to drawings 1450 here. Drawings is a debit account. Okay, item 2 finish. Item 3. A purchase of machinery costing 2500 have been recorded in the repairs account. Okay, so it is a purchase of machinery, but then we put it into repairs. Repairs debit side, machinery debit side. So we have to take away from repairs 2500 and put it back to the machinery cost account. Okay, so far it is not difficult. I hope it keeps like that. The depreciation on machinery was to be charged at 10% per annum using the reducing balance method. Okay, 10% reducing balance. Okay, we have to see if we have to make the adjustment or provide depreciation from scratch. Okay, we can see here depreciation charge, there is nothing. That means depreciation is not yet charged. Okay, 10% reducing balance method. So we have to look at here. Make sure you use the adjusted item. So it is here 120,000. Okay, plus 25,000. This is the adjusted cost minus 32520. Okay, and then multiply by 10%. 120,000, 2,500, 32520, 10%. It would be 8998. Okay, depreciation charge is in the debit side because it is an expense. So 8998 here, and then we put in the accumulated depreciation account, which is credit contra asset account 8998. Okay, next. Item 5, rent receivable. Okay, and income 375 have been posted to the rent payable account as 357. Okay, 375 is correct, but then we put it into the expense account 357. Okay, so we take away the incorrect one first. Let us go to the rent payable, debit side and expense, rent receivable. Hey, don't move. Credit side and income. So reduce the amount. I mean, take the incorrect amount from the wrong account first. So 357 here, and then 375 here. Okay, a reduction should be in the opposite side of the normal balance of the account. So 357, 375. Total we have 732. Okay, next. Purple. Let us take purple. An interledger set of contra entry 2800 had not been entered into the books. Okay, so contra entry, control account, we already know how it is done. Trade receivables, payables, okay, both negative. So trade payables, credit side, trade receivables, debit side. Okay, if we want to take away an amount, then we go to the opposite side. Okay, 28,000. No, 2,800. So trade payables, debit. okay, and trade receivables, debit, credit. Okay, next, last entry. Last entry, what color should we use? Light blue, maybe. Inventory value at 2000 is damaged and has no value. Okay, so this 2000 will be the impairment. So closing inventory, statement of financial position, debit, okay, and then statement of profit and loss, credit. We have to reduce again, go to the opposite side of it. Okay, so it is done. 15 marks, easy marks for you. Okay, I think all these 7 items are quite basic. Okay, next, state 2 stakeholders who may be interested in MIA's financial statements. It is too easy for you. Always give the bank, always give the government. If you have to give more, you can have supplier, customer, okay, or competitor, something like this. Okay, so part C, explain how the profit for the year will be affected by recording the purchase of non-current asset as a repairs account in the repairs account. Okay, so how profit would be affected. Okay, so purchase of non-current asset is a non-current asset, but then you put it as an expense. Okay, so if it is like this, then expense would be overstated. Okay, that's why your net profit would be understated. Okay, 19 marks, finish. Next part, question 3, we have partnership. Okay, let me change it first and then we read the question. Partnership. Okay, what happened? Partnership. Okay. So we have this Ali, Bob, and Chandler in partnership. What happened? Sharing profit and losses equally, and then we have the capital, we have the cash and cash equivalent, inventory, land and buildings, trade receivables, payables, and then Bob retires on the 1st of January. The remaining partners agree to continue sharing profits and losses equally. Assets revalued as follows. Goodwill valued at 36,000. Not to maintain goodwill in the partnership books. It was decided to settle the amount due to Bob by check. This was financed in part by Ellie and Chandler, each providing 50,000 as loans to the partnership to be repaid in full at the end of year 2024. Okay, that is long-term non-current liability. Okay, so what we have to do, revaluation account, capital of Bob. Okay, and we have to look at the final settlement, and then Ali's capital account balance, and then the partnership bank balance, and then the statement of financial position, only equities and liabilities section. Okay. Okay, so this is nice. Okay, nothing to write or calculation. So it is important that you know how all the numbers come and go. Okay, because it just asks you to work on part of the accounts. Okay, so the numbers has to be in your head. Okay, you have to make sure you can follow, okay, the whole process. Okay, but not just looking at what you are asked to do. Okay, So revaluation, if you have addition, revaluation upward, it would go here and increase. Okay, or maybe I do it like this. A decrease would be here. Okay, because it is an account that helps you calculate how much gain or loss you have in the revaluation process. Okay, so let us see. On the 1st of January, Bob retired. So everything will be on the 1st of January. All the dates will be on the 1st of January. So three assets are revalued, and then goodwill was also revalued, but it will go into the capital account of the partners. Let's see. Inventory, it is now 42500. That is a decrease of 2,500. Land and buildings carrying value 150. It is now 200, so 50,000 going upwards. Trade receivables 23450. It is now like this, 940, decrease. Okay, so 2,500, 940, and then 50,000. The inventory, trade receivables. Okay, year 2019, 1st of January. Okay, so you have, first of all, land and buildings going up by 50,000, and then inventory go down by 2,500, and also 940 for trade receivables. Okay, so this process is done before Bob leaves. Okay, that's why the distribution of gain is among the three partners. Okay, so capital account of the three partners, Ali, Bob, and Chanda. 50,000, 25, 940 divided by 3, 15520. Okay, and then capital account of Bob. Okay, we have to look at Bob originally have 9,84900. Okay, and then goodwill is 36,000. Okay. So, capital account, $84900, balance year 2019, 1st of January. Revaluation account, that is revaluation gain for Bob, 15520, and also for the goodwill adjustment, okay, to be 12,000 because it is 36,000 divided by 3. Okay, so there's no reduction, so everything will be settled. 12,000, it is 112,420. Okay, you may ask, okay, is it that this payment is financed by the two different partners, the two remaining partners? Yes, okay, but then let us go back to here. Okay, it was decided to settle the amount due to Bob by check. Okay, but the business don't have so much money, so it is financed in part by the two partners. Okay, the main point is, okay, it doesn't say that Ali and Chanda pay Bob, okay, and this is treated as a loan to the partnership. No, okay, it is settled by check. So simply, okay, Ali and Chanda give the money to the business bank account, okay, and then from the business bank account, the amount to Bob is settled. Okay, that's why it is only bank here. Okay, so next would be Ali's capital account balance, and we have to look back at how much Ali has in the first place. 64750. Okay, 64750. Okay, so 64750 opening balance. Okay, and we have revaluation gain 15520, and then also goodwill adjustment. This is the creation of goodwill. Okay, but then later we have to write off goodwill. 36,000 divided by 2 this time, so it is 18,000. Okay, so 64750. Oops. So it will be 74270. Okay, finished for Ali. And then for the partnership bank balance, okay, again we look back at how much balance. Cash and cash equivalent 4750. Okay, so originally they have 4750. Okay, and then from Ali and Chanda, okay, each has given 50,000, okay, to the business as a loan, okay, so as to finance the settlement to Bob. Okay, and the final settlement of Bob 112,420. So final settlement 112,420. Okay, so that would give you a negative amount of 7670. Okay, if it is an overdraft, I always state clearly that it is an overdraft, even though I have already given the negative sign. Okay, next, you are given that Chanda's capital account balance is this one. Okay, you can, verify. Okay, Chanda originally have 56,000 plus 15520 plus 12,000 minus 18,000. Okay, the same way to work out as Ali. Okay, that's why you are not asked to work out again, because it is the same thing. So 65520, yes. Okay, so next we have to work on the equity and liability section. So first part would be equity. Okay, so if it is, if you have capital and also current account, you can use column. Okay, but usually I like to show it like this. Okay, capital of Ali, and then capital of Chanda. Okay, Chanda given to you as 65520, And then Ali, we have to check our previous answer. 74270. 74270 added together, we have 139,790. Yes. Okay, total equity or total capital. Okay, both will be fine. And then we have liability. Loan from Ali, and then loan from Chanda, each 50,000. Okay, giving you 100,000 in total. Okay, and then next you have current liabilities. Okay, so I'll give you 5 seconds to think how many items of current liabilities you have. Okay, 5 minutes pass. You have 2. Okay, of course, trade payables given to you directly. Okay, and then you also have bank overdraft. Okay, don't forget this. Okay, so trade payables, let us look at the question, would be 17550. 17550. Okay, trade payables 17550. And then for bank overdraft 7670. Okay, that is 525220, and then we have 125220, 265010. Okay, I should have drawn the lines. Okay, it would be much more aligned if I do that. It's not too late. Okay, but then you know, okay, it's not good enough, but then just want you to look at the statement with a proper format. Okay, so 21 marks. Okay, we will have a break, but then before we have it, okay, let us scan through the remaining 2 questions. For question 4, you have 2 years, okay, and some transactions. You have to work on the statement of cash flows. Okay, and then question 5, single entry. Okay, so let us stop here. Ten-minute break. See you soon. I'm back. Let's continue with question 4. Okay, so we are asked to calculate the total depreciation charge and then the reconciliation profit given to you, and then the statement of cash flows, and then some other questions about profitability and liquidity. So let's see. Seems, oh, we have to be careful again. Okay, look at the dates. Okay, this is the year end. Okay, year end here. Okay, very dangerous. Okay, so I would copy, should I? Maybe some items. Okay, but bear in mind, okay, we have this closing balance in the left hand side. Okay, so share capital, we don't know how much. Share premium, and then 8% debentures. Okay, we have a reduction of 100,000, a repayment, so it goes to the financing activities negative. And then bank, okay, bank and short-term investment. Okay, be careful because short-term investment is also part of the cash and cash equivalent. Okay, so opening balance 50,000 and then 3750 negative. So closing balance being opening balance being 46250 and closing balance 20,000 and 4500 24500. Okay, that is a decrease of 21750. Okay, these 3 figures go into the last 3 figures of our statement of cash flows. Okay, inventory. Okay, inventory go up by 4450. So operating activities negative. Let us skip land and buildings and machinery first. Okay, trade payable, trade receivables. Trade payables go up by 21650, and then trade receivables also go up by 13640. Let me check my calculations again. I know it. 630. Check again. 430. 1630. Okay. So all operating activities. Trade receivables negative, trade payables positive. Okay, now we go to the next part. Okay, there were no acquisitions of machinery and no disposals of land and buildings. Okay. Okay, then we go to the non-current assets part first. A machine with a carrying value 21870 and accumulated depreciation 8130 sold for a profit. Okay, again we will work on this working 520 profit. Okay, and then the cost, we are not told about the cost, but then the carrying value 21870. Okay, accumulated depreciation 18130. Okay, with this we can calculate the cost first. Plus 8130. The cost being 30,000. Let me check. Yes. Okay, and then we can also calculate the proceeds. Okay, 2520 plus 21870. Okay, 22390. Yes. Okay, so this is for the disposal. Okay, so proceeds go into the investing activities, positive, and then the disposal gain operating activities, negative. And then this will help you calculate the depreciation of machinery. Okay, so let's see. Machinery, the cost from 380,000 to 350,000. This is according to our sale, our disposal of machinery. Okay, the cost being 30,000. Good. Okay, so minus 30,000, it will equal to this one. Okay, good. Finish. Okay, nothing else. Okay, but then for the accumulated depreciation, so we have minus 8130 for the disposal, and then we do not know how much should be added as depreciation, and then it will become 120,365. Okay, so let us calculate 102,890 minus 8130, and then plus 25515. Okay. Next would be land and buildings. Land was revalued upwards by 150,000. Okay, so land and buildings, let me use orange. Okay, plus 150. Okay, but then 450 plus 150, it is just 60,000. We have to add 100,000 more to make it 700,000. Let me check. 450, 150, and then 100. Yes. Okay, so how about accumulated depreciation from 50 to 65? So 15,000 is added to become 65,000. Okay, with these we know two more things. Okay, that is, first of all, purchases, investing activities, negative, and then depreciation, 15,000 and 25515. And remember, in the first requirement, we are asked to calculate depreciation charge. Okay, so it will be 15,000 plus 25515 being 40515. Okay, good. Next. Okay, and depreciation here, it will go into our operating activities, positive. Okay, so last few items is related to shares. Okay, and also dividend financing activity. Okay, let us take a look. On the 1st of July, what is our year end? Our year end is 31st March. Okay, on 1st of July, year 2018, bonus issue of 1 ordinary shares for every 2 ordinary shares held were made. The directors decided to leave the reserves in the most flexible form. That is, it will ought be taken from the share premium if it is available. Okay, so 1 share for every 2 shares held. Okay, we have 100,000 Okay, let me use purple. Okay, that means we are going to issue 50 more. Okay, and this amount will be from the share premium. Okay, just right. Bonus issue, no cash effect. Okay, next, a right issue. On the 1st of January year 2019, right issue of 1 ordinary shares for every 3 ordinary shares held was made at 1.2. The right issue was fully subscribed. Okay, so we now have 150,000, and then our right issue is 1 for every 3. That means we are going to issue 50 more, okay, at 1.2. Okay, that is 50. Okay, and then 0.2, that is 10. Okay, this is 1, this is 0.2, the share premium, and together we have 60,000. Okay, financing activities, positive, we receive this amount. Okay, and here we add 10,000 here. Okay, we are not asked to calculate the closing balance for share capital and share premium. Okay, but then we have to bear this in mind. Okay, make sure we put the adjustment there. Okay, here, always make this adjustment. Don't just put it in your head. Okay, so next one, dividend of 12.5% was paid for all ordinary shares. Okay, again, we have to update. Okay, because if we are not updated, then it is easy that we mess up the calculation for dividend. Okay, so now we have 200,000 in total. Okay, and then 12.5% multiplied by 12.5%, 200,000, 12.5%, that would be 25,000 for our dividend. Dividend is in the financing activity, negative. Okay, so now we have finished everything. We will put it into the statement of cash flows. Okay, here, profit for the year given to you, and then next item we have the adjustment. Okay, add depreciation minus gain on disposal. Okay, depreciation we have 40515 and then 520 as the disposal gain. Okay. 117320. Okay, next item we have the working capital. Okay, we have an increase in inventory, increase in trade receivables, and also increase in trade payables. Okay, so let's take a look at the values. Okay, 4450 and then 13640, 21630, 21630, 4450 negative, 13640, 40 negative. Okay, so we have 3, 5, 4, 0. 117, 320, 120, 860. Net cash from operating activities. Okay, 120860. Okay, we finish one part and then we go to the next part. Okay, why am I not drawing the lines today? Okay, what happened to me? Okay. Okay, just now it is net cash from operating activities 120860. Okay, and then next part would be investing activities. Okay, so we have two. Payment to acquire land and buildings, I remember it's 100K. Okay, but I don't remember the proceeds from the disposal. Proceeds from the disposal being 22390. 22390. 22390. Okay, 22390 minus 100K. So we have 77610 negative. Okay, that would be net cash used in investing activities. Okay, again, it is normal to have negative cash flows for investing activities because you have to invest in the company, okay, to make it continue to run. Okay, so next we would have cash flows from financing activities. We have dividend paid. We have repayment of debentures. And then we have issue of ordinary shares. A right issue, okay, if you prefer. Okay, so issue of ordinary shares, I remember it would be 60,000 positive. Dividend paid, 25,000. Okay, how about repayment of debentures? Okay, this is almost our first item dealt with. Okay, that's why I forgot. Okay, 100,000. Okay, 100,000. Okay, so much. Okay, 100,000. Okay, that means we will have yet another negative cash flows. Is 65,000 negative net cash used in financing activities. Okay, so 120 minus this one minus 65,000, we have 21750 negative, a net decrease. Okay, let me use another color. 21750 net decrease. Okay, and let's see if we can balance it. Let's see. 21750. 21, yes, okay, it is correct. 21750 negative. Okay, so opening balance 46250, closing balance 24500. Let us put it to the statement. Okay, 46250 and then 24500. Yes, correct. Okay, done. Question 4 finished. Question 5 single entry, right? No, we still have 5 points, okay, for the evaluation. Evaluate the effect on both profitability and liquidity of the information shown in the statement of cash flows. Okay, so let us see. Profitability. First of all, okay, we have positive cash flows from operating activities as well as a positive profit, okay, 77,000, and then good cash flows from operating activities. Okay, nice. Okay, but then how about liquidity? Liquidity, we have to look at the overall situation. Okay, that is, first of all, here we have a significant decrease in the cash and cash equivalent. Okay, but then it is not that worrying because, okay, we still have positive cash and cash equivalent. Okay, and we can pay dividend. Okay, even though we have repaid quite a significant amount on the debentures. Okay, so for me it is not worrying. Okay, especially when we have an overdraft from last year, but then this year it is a positive balance. Okay, so for me, I think it is okay. Okay, we are just not keeping so much, the extra cash. Okay, we don't have good cash flow last year. Okay, that's why we sell some of our short-term investment, okay, so that we can get hold of more cash, enough cash to repay our debentures, to have investment in our own company. Okay, so I think that's not much problem. Okay, so the evaluation, okay, you can write several points. Okay, so for profitability, okay, you can say, first of all, we have a good profit, we have positive positive cash flows from operating activities. Okay, this is quite good. Okay, and then for liquidity, okay, you can mention, okay, there is a concern because of a large decrease in cash and cash equivalent. Okay, it is a 21,000 decrease. Okay, you can say this is to be concerned by management. Okay, but then it is still okay. Okay, because you have positive cash and cash equivalent. Okay, you have positive bank balance. Okay, and you have the ability to pay dividend even though you have repaid 100,000 debentures. Okay, and this will save you on future interest expense and interest payment. Okay, so I think, okay, the overall conclusion is that both profitability and liquidity is okay. So next question, single entry. Let me change the question information first. Single entry. Okay, so let us look at the requirement before we go to the question, the information given. State 2 reasons why a business should maintain a full set of accounting records. Okay, we have been dealing with these questions for more than 5 times already, I think. Okay, so it will be easy for you to locate error. Okay, and also it would help you provide updated information for management decision. Okay, or some other points that you can think of. Okay, calculate the amount of cash taken by the employee. Okay, there is cash stolen. Cash stolen. Okay, and then complete the statement of profit and loss from gross profit. Okay, and then explain how profitability will be affected. Okay, explanation again, and then some decision. Okay, so this is not long. Okay, so let's see. Rohan does not maintain full sets of accounting record, but was able to provide the following information for the year ended 31st March year 2019. Okay, again, be careful because year 2019 is here. Okay, inventory, motor vehicles, carrying value, other receivables, insurance, that is prepayment, and then we have accrual, other payables, rent, trade payables as well, and then cash in hand, receipts and payment. For receipts, we have cash banked, and then drawings, insurance, motor vehicles, trade payables. Okay. Rohan only sells for cash and suspect that his employee had taken cash from the till but was not sure of the amount. Rohan was not insured for theft. The total cash takings were 127780. Okay, that is the total cash sales before making cash payments of these. Okay, So we have to calculate the amount of cash taken from the employee. Okay, so I'm not going to go to the next page, so let us stick in here. Okay, if we want to know the amount of cash taken, then we have to use these, and these things to help us. Okay, should we use the opening and closing balance? Let us check the opening and closing balance to see if it match. Okay, opening, it is yes, I think so. Everything should go in. Okay, yes. So originally we have 957 opening balance for cash, and then we have an addition of 127780. This is the cash sales. Okay, and then minus all the payments, okay, which include, okay, the following cash payments were made: 12360, and then drawings of 6250. Okay, and then the rest is bank. Okay, 108750. Okay, so these, okay, should give you a balance of 457 here. Okay, but then if it is not, if something is short, okay, then we know cash taken is here. Okay, so 957 1257780 minus, okay, so these should be added here, the 3 12360 6250 108750. Yes, we should have 1377. Okay, but then we only have 457 here. So the amount taken by the employee is 920. Loss of cash, 920. Okay, so here you should show the working here. I'm not going to copy one more time. So 920, I show the answer. And then we have to complete the statement of profit and loss. Okay, so gross profit given to you already. Okay, we have to see if we have any other expenses. Of course we have, and there is no other income. Okay, so let us just write here, less expenses. Okay, we have loss of cash, 920. What else do we have? We have different expenses, like, first of all, insurance, rent. Okay, oops, insurance, rent. Okay, and then I think depreciation for motor vehicle. Okay, depreciation. Okay, after this we should have profit for the year. Okay, like this. Okay, so let's see. Insurance, 1840 payment. Okay, but then we have to adjust for other receivables. Okay, so plus minus 1840 1880. Okay, and then for rent it is 12360 here, and then adjust for accrual minus 240 plus 750 12360 minus 240 750 is equal to 12870. Okay. Insurance 1880, rent 12870. Let me check one more time. Minus payment receivables. Oh yeah. Here. I've told you, okay, very dangerous because closing balance is here. Closing balance. So I mix up these adjustment. Okay. So dangerous. Okay, so let me write again. Insurance, we have, it is other receivables, so it is prepayment. We have to add opening balance less closing balance. Okay, so 1840 plus 140 minus 180. Okay, so 1800. Okay, this one. Okay, we have to 12360 minus opening balance plus closing balance, trade other payables. So it will be minus 750 plus 240 is equal to 1237 minus 7 plus. Okay, both you and me have to be careful. Okay, so 1800 11850. Okay. One 11850. Depreciation. Let us see. Motor vehicles. Let me change another color. Carrying value. Okay, be careful. This is opening, this is closing. Okay, add purchases of new vehicle minus depreciation would be equal to closing balance 40122. Okay, we have to calculate depreciation. Purchase of motor vehicle will be 30,000. Okay, 30,000 here. Okay, so 14580 plus 30,000. Okay, depreciation 4458. 4458. Okay. 950 19028. $61755 net profit for the year. Okay, so our next part, explain how Rohan's profitability may be affected if he decides to introduce credit sales. Okay, so there are two directions that we can write about. Okay, 2 marks. Okay, I might write both sides. Okay, first of all, if you introduce credit sales, okay, profitability may go up because you have more sales. Okay, you have more customers. Okay, but okay, it is also possible that because you have credit sales, you have to offer cash discount to urge your customers to pay. Okay, if you offer cash discount, okay, then your revenue, your profitability may also go down. Okay, and this is also the case if your trade receivables, if your credit customers are not paying you back. It is also possible that you have irrecoverable debt. Okay, then your profitability will also go down. Okay, so 2 sides. Next, state the ratio that Rohan should monitor in order to maintain good credit control. Okay, so the immediate ratio that we will think of related to credit control would be the trade receivables collection period. Okay, how long on average they take to repay you the amount for the credit sales. Okay, next, last page, is it? Okay, why? Okay, discuss whether Rohan should employ either a financial accountant or a management accountant. Okay. I think first of all, Rohan now use single entry. Okay, for single entry accounting system, not much financial information is available. Okay, so if you hire a management accountant, then that is of no use at all. Okay, or limited use. Okay, so I would say since Rohan is using single entry, the most important thing or the most urgent thing that Rohan need is to change to double entry first. Okay, to have full sets of accounting financial records first. Okay, so if that is the case, a financial accountant is needed. Okay, because a financial accountant helps you build an accounting system, okay, to record, organize, report, and also control. Okay, control is very important. Control procedures in the accounting process is even more important than the accounting system itself, because if you have a full records, okay, accounting double entry accounting system, but then no good control procedure is planned or implemented, then that is of no use. Okay, so they will help you that. Okay, this financial accountant will help you do this. Okay, and this information would be used to make decision. Okay, and then you can also mention management accountant, okay, only when such information is available. A management accountant would be useful. Okay, so again, the conclusion is, of course, financial accountant first, and then, okay, management accountant. Okay, so we have finished this last question. Okay, and tomorrow, hopefully, if I can do that, okay, we will work on the 11th set of paper for March year 2019. Okay, so see you. Bye.